Hey everybody, it's me, Gregory Mannarino. How are you today? It is Friday, February 2nd, 2018. People, right off the bat, as I am doing this, the U.S. 10-year yield is over 2.85%. It's a bloodbath, and I am not kidding, in the bond market. If you're watching this on my website, traderschoice.net, or if you're not watching it there, go to my website, traderschoice.net, have a look at that bond market chart, and I'm telling you, your eyeballs are going to explode. So bonds are selling off at a rapid pace here. This is putting a lot of pressure on the stock market, which is down across the board. The Dow Jones Industrial Average is down over 300 points. I took up this position this morning, Intel, April in the money puts. You know how I hate holding positions through the weekend, but in this case, I mean, this is serious, and I think you can see that. Let's just back up a moment. Last Friday, I got something very wrong, and I want to cover it, and I want to admit that here and explain why I got it wrong. I said this week was going to be bullish for the stock market. Well, to say the least, I got that wrong. But the reason why I believed that this week would be bullish for the market is because I expected earnings to come in good or better than expected, and forward guidance to come in good or better than expected. And those things did play out to be true. We also got some really good economic reports this morning. Doesn't matter. It's the bond market that is dictating what stocks are going to do. And you can see this in real time. You know, it's kind of funny. You watch these professionals on the mainstream financial channels, and they've been trying to sell you this. They've been saying, oh, rates are going to rise along with stocks. It's a good thing. Really? Look, they just, obviously, and I've been laughing at these people. You know that, and I've outlined that on this blog countless times. They have to sell you something. It's not real. You understand that. And that's what's happening here. I cannot stress this enough. Please listen to what I'm saying. If this bond market sell-off continues like it's been doing now, this is it for the stock market. This is it. I mean, the stock market is in a bubble being built up on the back of a debt bubble. If this debt bubble is bursting right now, we're in a lot of trouble, and I cannot stress that enough either. I mean, heaps of trouble. So again, as I have been suggesting, especially today, people, do yourself a favor. It's a Friday. If you have an investment plan that only makes cash if stocks go higher, like a 401k plan or some other type of fund like that, get on the phone with your institution and explain to them what they're going to do. Ask them what they're going to do to protect your portfolio. Because again, this bond market sell-off seems to be unstoppable at this particular time. And if it progresses, this will be the top of the third and final bubble. I mean, because there's no recovering from this. This bubble that we're in now has been built up on the back of a debt bubble. So, you know, the Federal Reserve, in collusion with other world central banks, have bought everything in sight, inflating this Frankenstein of a debt bubble, putting it on our backs here, so what they've been successful in doing here is reinflating a housing bubble, because now those toxic assets that they bought are now worth something. So all of us are going to suffer here for what they have done, and not one of these people is going to be held accountable for what could potentially unfold. Now, I am not saying 100% that this is the top of the third and final bubble. Final bubble meaning they can't reinflate this with more debt. That's the problem here. The stock market will never recover in our lifetimes. That's my take on it right now. And I have been spot freaking on with everything that is occurring around us, people. Right now, gold and silver are under a lot of pressure. Why is that? Well, we've seen this before. In 2008, if you remember, when the bubble burst, gold and silver took a big hit initially, and then they ripped higher. It's a knee-jerk, generally. So this also is a tell to me that this is not just a run-of-the-mill correction that we're seeing. unless the banks, listen to what I'm saying here, unless the banks and the Federal Reserve get control of this bond market, this is it. This is it. We are now at the threshold of the third mega stock market bubble bursting. So we're going to have to watch this. I cannot stress that enough here. Keep your eye on the bond market. And look, I've been trying to explain this to people for years. If you're new here, forget the stock market like the Confederacy of Dunces want you to focus on. Everything prices off of what happens in the debt market or the bond market, and you can see what's happening right now. And if you were to turn on the mainstream financial channels, they're going to try to convince you that this is nothing what we're seeing. They're probably not going to address the issue of the bond market. They're going to talk about how, all these earnings came in really good here. We don't understand why stocks are selling off like this. Of course they understand it. They just can't tell you. And that's why I'm happy you're here. All right, look. So we're going to outline this all at the end of the day, and it's going to be interesting. I can promise you that. Let's see where it goes, people. I'll see you later. Over and out.